Hi, my name's Greg Young, and I'm with the Headful Wealth Management. 2022 has been a bit of a roller coaster for investors. On one hand, if you've been fortunate enough to sell your home, you probably made a record large profit compared to past home sales. On the other hand, if you're watching your investments, you're probably watching them slide. Meanwhile, inflation's taking a bite out of your budget. In that regard, I don't want you to worry. In this video, I'm going to walk you through tax loss harvesting. This is a potential way to help turn your investment losses into tax breaks. It does have some pretty technical stuff, so bear with me, but I'm going to try my best to keep it simple. Tax loss harvesting is where we offset tax with a loss that we intentionally take. So when you sell an investment for a gain, right, that's awesome. We're happy about that until we have to pay the tax bill. You can lower how much of those capital gains taxes that you owe if you actually go and find one of your losers in your portfolio and you sell that asset at a loss on purpose. Fair warning here. You don't sell for a loss on purpose unless it makes sense in your financial situation, all right? So I'm not telling you just to go out and sell all willy-nilly like. I'm telling you that if you have recognized gains that you're going to get taxed on, and you also have some positions that aren't ideal in your portfolio, you can use some of those losses to offset some of your tax liability on the gains. Here are three things that I want you to keep in mind, however. If you sold that asset that you held for less than a year, you're actually generating short-term gains, and those are taxed at a higher rate than long-term gains. So the actual threshold between short and long-term isn't arbitrarily a year. It's a year and a day. So if you want it to be long-term, you have to have had it for 366 days. 365 or less is short-term. All right? You're going to want to classify those assets into those two buckets. Short-term, less than a year in a day, or long-term, greater than a year in a day. And this is important. When you sell a loss to offset gains, you have to keep apples with apples and oranges with oranges. Short-term losses offset short-term gains. Long-term losses offset long-term gains. And for the purpose of just your account level, offsetting those losses, it's pretty self-explanatory, so keep apples with apples. You know, we're offsetting short-term losses with those short-term gains, etc. For those of you that want to try and transfer some of the tax loss to your income tax return, you're also going to have a net or a net long-term, because that's the only thing that's going to offset any of that ordinary income. But that is a video for another day, all right? The second thing I want you to remember, the third thing I want you to remember is you're not selling just to harvest a loss. This is an opportunity, one of our many tools. All right, so it is not always best for your financial situation to offset a loss. In fact, there are opportunities and instances where you want to you want to sell at a gain on purpose. All right, or we'll call that tax gain harvesting as the contrary to tax loss harvesting. Working with a professional can help you identify the right times to liquidate. Okay. If you are like most folks, you want to pay the least amount of taxes possible. That way, you continue to save for the future, right? That's why I wrote this video. This video is to share a technique called tax loss harvesting that can make that possible. But you need to look at your overall financial strategy to see if it makes sense this year and each year after that you intend on implementing the strategy. If you have a question on anything that I've discussed, or would like to speak personally about your situation, please use the form at the bottom of this message, and I will respond personally. Thanks for staying tuned, and look forward to more videos.